Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin / cryptocurrency update for Thursday, June the 11th. Before I jump into the content for this video, please do me a huge favor, hit the thumbs up button, make sure you subscribe to the channel, make sure you click that bell icon to get notifications when I release new updates, and make sure you check the description for a link where you can join the Patron, which will give you access to even more frequent updates. So I wanted to do an extra video this week, and I'll probably post this on Patreon first, maybe post it on YouTube a couple days later, so I'm not sure when you're watching this, but as of right now when I'm shooting it, the market has had a pretty rough day, and so I wanted to kind of talk about that, talk about what's happening, and address some criticisms that have been tossed my way here recently and explain why, in the face of those criticisms, I remained bearish, okay? So first things first, I want to talk about Hertz. All right, obviously this is a crypto channel, but the more you learn about markets and the more you learn about trading, the more opportunity there is for you. And my hope is that when people watch this channel, they learn enough that they can feel confident going out there and maybe getting their feet wet in different markets, because there's so much opportunity outside of crypto. And I'm not saying don't trade crypto. I'm just saying don't pigeonhole yourself to crypto, because these other markets are every bit as profitable. So a couple days ago, I shot a video, and in that video, I talked about Hertz and how Hertz had went up 1,500% in just 2 weeks. And of course, anytime an asset goes crazy like that, retail public starts FOMOing in, and it almost always ends the same way. So if you look at what happened with Hertz, it pumped 1,462% in 13 days. Amazing return if you caught it. But while everybody up here was getting euphoric and FOMOing in, and people that didn't know anything about technical analysis were being, hoodwinked, people who trade for a living, people who understand technical analysis, understood that there was still this huge gap right here and this gap right here. Now this one had been partially filled in by this candle and this candle, but there is still this gap here, and look what happened. Right back down, and look where price came down to. Bam. Right in to that gap. And if you look, poor retail Joe, who was buying up here at $6.25, experienced a 72.64% drawdown if they held all the way down, and they would currently be down about 67%. Meaning they lost 2/3 of their investment over the course of 3 days. Okay, so whether it's crypto, whether it's stocks, doesn't matter. Keep an eye out for those gaps. They are crazy powerful, and it doesn't always give you a signal to go short or go long, but sometimes it's more of a warning flag, like, hey, just stay out. Just let this market settle down a little bit and look for a proper entry, and that's really what this was, right? Just looking at the gap alone, that wouldn't be enough reason for me to go into a short position on Hertz, but it would have been enough reason for me to say, I'm not touching it with a 10-foot pole on a long position, okay? If we jump over to the US 30, and all I had said in my previous video, it may have been the last one or the one before that, was that I was looking for this to come down and possibly, if it wasn't a bear, if we were out of the bear and this was a new bull, I was looking for it to at least come down and test this old high. Well, here we are, right? You can get euphoric, you can get, complacent, you can get all those things that I talked about in that last video, but all that's going to happen is the market's going to take your money away from you, okay? So this right here is the Dow Jones Industrial Average. We've been inside this upward rising channel now for a couple of months. There was a really good signal back here that, we may have wanted to go long when it had this bullish retest. But if somebody was going to short it, RSI back here was sitting at the top of the channel right at resistance. Don't know that I would have shorted on that alone anyway, because you had your first touch, you had your second touch, your third touch, your fourth touch, fifth touch. That's a whole lot of touches, right? It would have made sense for that to break, and that's what happened. It broke, went up almost 2%, but now it's doing exactly what I was watching for, which is pulling back. It's pulled back about a little over 9% now. So what we have to do is we have to keep an eye on this, and we can't get too bearish, right, just yet, because, so far it's still above these old levels of support right back through here. I would really say this is more support right here, okay? So that's the level that I'm going to watch and see if it holds up or whether it gives way. Couple things to note on this chart, and again, this is the S&P 500, but we all know that Bitcoin has showed a heavy correlation to the stock market the last few months. Couple things here. This is a daily chart. It's obviously broken pretty far outside of this rising channel. The day is going to close in less than an hour, so unless this thing suddenly pumps back up, this is very bearish in nature. The other thing to note is it is slightly underneath this rising trend line. Okay, that's bearish in nature. And the worst thing as far as for bulls, the worst thing about this chart is this right here. This 200-day moving average acted as resistance back here, which is what you would expect. Pumped up here, it was looking good. For it to come back down and test this, and move off of it would be very bullish in nature. But it didn't do that. It didn't even slow down. It just chopped right through it like a hot knife through butter, and that's terrible. That's a terrible sign for the bulls. So there's never a guarantee with markets. There's never a guarantee with trading, but certainly not what you want to see. So you take all those things, and this looks pretty rough. If we jump over to the US 500, which is the S&P 500, you can see here that we have these two rising trend lines in RSI. Price has, our RSI is obviously broke through both of those. This again is going to be closing in under an hour. This one's a little bit better because the 200-day moving average has offered some type of support. The moving average is at 3,019 right now. The S&P 500 is sitting at 3,014. So very, very close, slightly underneath it, but it is trying to hold up some type of support there. So I would be interested to kind of watch this a little bit further and see how it plays out. That being said, if we're looking at array and we're looking at an upward sloping line of support, obviously we sliced right through that as well. So again, the bears definitely have a little bit more control than the bulls here as well. All right. If we jump over to the US 100, which is the NASDAQ chart, this is actually a monthly chart, and this thing looks really, really terrible. Okay. The NASDAQ actually put in an all-time high this month, meaning that after it had that horrific crash back in March, it turned around, went parabolic, and put in an all-time high. Looks a whole lot like a blow-off top, okay? And if you look at this, it had this long-running bearish divergence, okay? You basically had this downward sloping line of resistance on RSI, and it just continued putting in higher high after higher high after higher high. So, as long as we're below this monthly RSI line, I'm going to say that that's bearish in nature. The fact that this is trying to put in a wick way too early in the month to think too far ahead. But, you certainly want to see this thing come back and start filling in this candle over the next 3 weeks. Otherwise, it's going to be bad news, okay? So it just doesn't look good. So let's jump over to crypto, okay? Because most of you watching are more crypto, traders than you are NASDAQ and all that stuff. So this is the daily chart. This is a chart that I posted up maybe a week or so back. Well, I guess it would have been almost 2 weeks ago, right? I drew this line up saying that we had this, unconfirmed bearish divergence because at the time it was unconfirmed. And it was very suspicious because it was closing right at this green line. This green line is the line of resistance going back to 2017. It's drawn from the top in 2017 to the top of 2019. So price came up, closed right at it, right slightly above it, in fact, while putting in this bearish divergence, and then of course collapsed. And then what I've been saying for the last week or so is that we were stuck in this range, and I wanted to see what, which way it broke. Was it going to break north of this wannabe triangle down here, or was it going to break south? So yesterday, when the candle closed, it closed right at, maybe even slightly above, if you zoom in, slightly above this line, right? I was able to get into a short at 98.80, but I completely flubbed it. I'll talk about that in a second. And then, of course, we have this dump today. So, I'd love to pat myself on the back and brag about making a ton of money on that short, but I'll tell you what I did, guys. It was the dumbest thing. I went short at 98.80. I went to bed. I got up this morning, and I had to take my car in to get service done on it, and so I didn't want to leave the trade open. So I put in a trailing stop loss, and my stop loss was at 97.94, and it was on Bybit, and that thing pumped up to exactly 97.94, stopped me out, and then dumped. So I got like a little under 1%, which was okay, but I missed the other $700 worth of drop. So it was a pretty brutal slap in the face. But that's trading, right? So when I look at this thing, what I would say is this is bearish in nature, being underneath this bottom line, not great. There's almost 3.5 hours, a little over 3.5 hours left though. So a lot can happen. But the other thing that's interesting to me is two lines, really. This is the line going back to March, okay? Obviously shattered, right? Completely shattered. But this is typically the time where a lot of fair weather traders, a lot of the real bullish people are going to suddenly switch to bearish people, and they're going to start talking about new lows and all this kind of stuff. And maybe they're right. Maybe they get lucky on that, maybe not. But when I look at this, I'm very interested to see how this price acts, because yes, it has broken underneath this support here, but we still have the shorter support that goes back to May, right? And this is not a small support. This is about a 30 or 31 days worth of support here, going back to May 10th. And you can see that, yes, it threw a tail down underneath it, but right now, and again, there's 3.5 hours left in the day, but right now, price is climbing back above this. This could absolutely be a case of washing out longs before further upside, okay? You guys know that I tend to lean bearish, but I also want to try to keep an open mind and not get too crazy. And this is a really big dump for one day. And the fact that it did dump like this, the fact that it, shoved itself way down into the severely oversold territory on almost all of the smaller time frames, the 5-minute, the 15-minute, the hourly. I believe even the 4-hour got over, even the 4-hour, all the way down here to 26. So, very oversold. The hourly got down to 8, okay, 8.93. The last time we saw those types of levels was back in March. All right, not the first time ever, but in March, right around March 8th, it got down there. And then we got a bounce. So, I think it's a little sketchy to suddenly get super bearish. Now, after it has a bounce, or if it has a bounce, then we might start, I might start looking for short positions again. Because, obviously, if you look back in March 8th, it got down there. Price was around 1,700. It had this little pump up to about 81 or 8,200, and then it just absolutely collapsed down to 3,800 bucks, right? So I'm not saying that the bottom is in. What I'm saying is we have to be careful, trying to jump onto the tail end of a move. It could absolutely bounce back up because, again, guys, liquidity gaps work both ways. Yes, we have these two purple liquidity gaps, but guess what? Now we also have a new one. Now we have this liquidity gap from what happened today, and it looks like this, right? You've got this big old gap sitting here. So now what happens, right? When does this gap get filled in? Maybe months down the road, maybe years, or maybe, right, this thing does what it likes to do, which is waterfall down, suck in bears, wash out longs, and then trend right back up, fill in the gap, and then go down, right? That's what Bitcoin loves to do. It loves to waterfall and then trap bears, go up, punish bears, trap bulls, waterfall, go up, rinse and repeat, right? And what I see when I look at this, what is interesting to me is when I look at this thicker green line and this thicker green line, if I start drawing this out, this almost looks like a rising wedge, right? Almost looks like a rising wedge type of deal where we could get some type of move like this, or maybe some type of move like this, and then finally fall out the bottom. So I just think it's really dangerous. If you weren't already in a short, if you're not already sitting in profit, just be aware that we did catch support so far. And again, we've got 3.5 hours left, so this thing could completely give way and this whole theory gets thrown out the window. But I've just seen this too many times where Bitcoin likes to suck in the bears, right? So I will, try to watch the smaller time frames for my own trading to try to get into some day trade type of stuff. but I think I missed the boat on the swing trade. That swing trade was from, you know, where I shorted at 98.80 down to 9 grand. That was the swing trade, and I completely screwed it up and turned what should have been an 8 or 10% trade into a 1% trade. So that's going to sting for quite a while. All right. But that is what I'm seeing on Bitcoin on the daily chart. Again, keep in mind that this thing is showing heavy correlation with the stock market. And when you look at that US 30 and that US 100 and that US 500, there's a lot of, you know, what looks to be rough waters or potential rough waters there. So if that stock market starts giving way, you know, this may not have any oomph to bounce, and it may just, you know, waterfall down like, you know, it did back here where it just completely fell apart. All right. But I think I will wrap up there since this is a midweek update, not the big weekly update. Hopefully that, you know, gives you guys some insights and maybe helps you spot some things that maybe weren't jumping out at you. If you have any questions, be sure and let me know. But other than that, just want to say thanks for watching. Obviously, please remember that I am just some guy sitting in a spare bedroom, so nothing in the video is financial advice. Nothing in the video is trade advice. You should always do your own due diligence and seek out professional investment advice from a licensed financial advisor, which I am not, before making any type of investment in cryptocurrency or the stock market. And again, if you haven't already, please be sure to give the video a thumbs up, subscribe to the channel, and don't forget to check the description for a link where you can join the Patron to get access to even more frequent updates.